with the stock market essentials. And then some things that the stock market has done for me. It allowed me to buy my first car back in 2020, right? I sold about 30,000 of my stock portfolio and I bought my first car. It was the 2020 Nissan Altima, sports edition, right? Leather seats. Nothing crazy, nothing too fancy. But again, I got it off the lot. My stock portfolio, my investments that I made paid for it fresh off the lot. I had like 2 miles. Stocks also provide me another source of income through dividends, right? So each month I'm getting monthly checks. And another thing that the stock does for me is it provides leverage, right? So I could pull out a loan backed by my securities without having to sell the stock. Almost like when it comes to real estate, like a home equity line of credit, right? Instead of selling my stock portfolio and having to pay capital gains tax on that, I could leverage it. I could take out a loan against it, pull out some money from it, and use that to invest in other things, right? So there's a lot of ways you could utilize your stock market portfolio, even if you don't want to sell. So now, why even invest in the stock market? In my opinion, it's low capital, meaning low cash requirement, right? It doesn't cost that much to get into the market, right? AT&T is a great example. AT&T is less than $20, right? You can get invested today. You could buy AT&T stock for $20 instead of going out to eat or buying something. Put that money into the market and let it work for you, right? On top of that, when you invest in the market, you're giving your money to some of the best companies and CEOs to grow it, right? For example, Tesla's a big company, right? Elon Musk is an innovator. That electric vehicle has been going crazy, right? A lot of people, when they want an electric vehicle, they think of Tesla. So if you invest in Tesla, basically what you're doing is you're giving Elon Musk money to grow the company and grow the money that you're giving him. Another reason to invest is that it's highly liquid, right? You could easily convert it into cash. So you can sell your stock, take the profits, and a lot of brokerages, they'll give you a debit card. So you could actually use that money that same day. If you want to go out and buy something, take yourself out to dinner with the money that you made. And again, you can create a source of passive income through dividends, which we'll speak about a little bit later. And on top of that, stocks, they typically grow faster than inflation. The average inflation rate is about 3%. I know the past couple of years has been pretty high. So just looking at this chart right here, the S&P 500 is basically represents the top 500 largest companies in the US versus the inflation rate. As we can see on average, the dark blue is pretty much the market returns, right? It's pretty much been outperforming inflation, right? So when you invest your money and as inflation increases, the value of these stocks typically increase as well. So when I'm looking at why to invest, I was reading this article on Fortune magazine, and they were basically breaking down how the top 1% of households in the US, how they invest their money and where they have majority of their capital. And I saw this chart right here, right? And if we look at the top 1% here, when it comes to stocks, they own 53.5% of stocks in the US, right? So majority of their wealth is tied up into the market, right? And they understand that with stocks, it's typically one of the asset classes that has the highest long-term returns, right? So if the 1% is putting majority of their wealth into the market, we should be doing that too, right? We should be getting a piece of that pie. So now breaking down, what is a stock? A stock is a piece of a company which represents ownership. Stocks are often called equity. A single stock is a share of a company. So think of like a pie, right? When you buy a stock, you're buying this section right here, you're buying a share of it. So now you become what is called a minority owner. So when you own a stock, you take part of the company's growth, their profits, their assets, and their dividends. So why do companies issue stocks? Companies issue stocks to raise money to grow, expand, and to launch new projects, right? These companies sell their shares to the public through a stock exchange like the New York Stock Exchange, right? This is done through an IPO, initial public offering. By doing this, by going public, they have to release all their financial statements, right? You can see how much the company's profiting, all the assets that they own, simply by investing in the company, just going on the company website as well. They'll report all this stuff for you, so you have access to it when looking to invest in a company. So now, how to make money with stocks? There's only two ways to really make money with stocks. One is capital appreciation. This is basically when the price of your stock goes up in value. Compared to like real estate, it's basically when you buy the house at one price and then you sell it at a higher price, right? The equity builds and then you sell it. And then once you sell it, that's capital appreciation. You want to sell it at a higher price. And second, annually, yearly, it all depends on the company. Me, I invest for dividends, right? I want to have a consistent cash flow. And I feel dividends are the most truest form of passive income. Now, compared to real estate, dividends, think of it like rental income, right? You purchase a house for the cash flow for renting it out. That's basically what dividends are, right? You want to get that consistent cash flow. You want money to be coming into your pocket. Now, there's two stock market strategies. There's trading, right? Which is there's two methods, day trading and swing trading. This method or this strategy, when it comes to the market, it's a little bit more risky. You can make quicker money, but it does require a lot more time and attention. The second strategy is your basic investing. This is your buy and hold, your more long-term, right? It's a little bit more boring, but the results will compound, requires less time and attention, and it's lower risk. This is a method that I've been using, right? And it's been good to me. And again, I'm assuming that a lot of us have other things that require our time and attention, whether that's working, your regular job, you got kids, you got your own business venture. A lot of times we don't have the ability to sit at a desk and constantly be looking at charts, sitting there, getting in, buying a position, selling a position consistently. So I'm starting to dabble a little bit into trading, but majority of my gains and my profits have come from long-term investing, right? Just buy it and hold it. The longer you hold, the lower risk you have, because the price of a stock is typically going to reflect how well the company's performing, right? If the company's a great company, over time, the value of it's going to increase. So dividends, this is my favorite part. So not all companies pay a dividend. If they do, it's going to be they're going to have a dividend yield, right? So the dividend yield is basically a percentage of what the company will pay you. So let's say a company costs $100, their dividend yield is 10%. The company is going to pay you $10, right? In dividend, just for investing $100. So when you buy a company that pays a dividend, that's another source of income. Dividends, in my opinion, are the most truest form of passive income, because you're not making any calls. You don't have to drive anywhere. You don't have to talk to people. You just simply collect a check. You put your money in this company and they pay you a dividend. Now, when it comes to companies that pay a dividend, a strategy that I like to look at is what are called dividend kings, right? So these are companies that have been paying and increasing their dividend for the past 50 years, right? I have 4 of them right here. Pepsi is one company, Walmart, 3M, Johnson & Johnson. So you can look on Google, just type in dividend kings, and it'll give you a list of companies that have been paying and increasing their dividends for the past 50 years. So another thing that I want you guys to take into account is that stocks don't always go up, right? A lot of times they might drop. Sometimes the drops might be heavy. Like in 2020, right, when the pandemic hit, the stock market dropped like crazy, right? Everybody was going crazy, but just because the market's down doesn't necessarily mean the company's doing bad, right? If we look at Starbucks during the pandemic, they had a line going out of the parking lot, at least where I'm from, right here in Cali. They were busy, right? There was a lot of people going out to get their Starbucks. Their company stock went down, but they're still making money, right? So the price of the stock doesn't necessarily mean the company's doing bad all the time, right? But like how I was mentioning earlier, stocks tend to go up over the long time, over decades. It's not a straight line. You're going to have ups and you're going to have downs, right? Over the past 20 years, the stock market typically gives you a return annually of 11.2%, right? That's a big return on your investment, 11.2% each year on average. Now, what causes prices to fluctuate and move up and down a lot? It's usually just due to emotion, right? People might hear some news about a stock and they might think, oh, this company is going to do bad. So, and then people tend to sell, right? But in reality, like how I said, when the pandemic hit, people thought everything was going to crash. The world was going to end, all kinds of stuff, right? But we still saw the line at Starbucks, going out of the parking lot. We still saw people going to Walmart to buy their groceries, right? So in the short run, they were thinking, oh, this is bad, right? There is a lot of fear. But in the long run, if you look at those companies, their stock price is up. So again, stocks don't always tend to go up. If we look at this chart here, right, all the gray areas, these are all the recessions, right, when the economy was doing bad. But when in doubt, you zoom out and you see overall market tends to go up, right? And some of that's due to inflation, right? Because as prices go up, so do the cost of assets, right? The cost of stocks, they're going to tend to go up too, right? So keep that in mind. So how do I buy stocks, right? In order to buy stocks, you're going to need a brokerage account. So there's like Robinhood, Vanguard, M1 Finance, Webull. You'll need a social security, your banking information. Some of them may require a photo ID. I personally use Robinhood. I think that one's a lot simpler, a lot easier to use, user friendly. And majority of the time I have my phone in my hand. So I'll just go on the Robinhood app, look at the charts, look at what stocks are going on, price movements, and I'll just buy it through there. Again, 9 times out of 10, I have my phone in my hand. So I just buy it using Robinhood. I do use E-Trade as well, but I just think the user interface on Robinhood is a lot smoother. So that's the one that I use. I keep majority of my investments in that brokerage firm. So now when it comes to like looking at stocks, this I just typed in on Google, right? PepsiCo. Usually they're gonna have a section right here, which is their current price. They have a bunch of different charts just to see kind of how they're moving. This right here open, that's the price of the stock when it opened. The high is the highest point that it hit through the day. Low is the lowest point that it hit throughout the day. PE ratio, this is the price to earnings. So this is pretty much as a gauge to value like a company's price based to its earnings, right? So this is kind of like what I use when looking at stocks. I typically like to have them like around 20. So anything too crazy, anything over 20, to me seems like a little bit expensive. The dividend yield, we mentioned this earlier, right? This is the percentage that we can expect the company to pay us. So if we buy one share of Pepsi at 168, they're going to pay us 3%. So if I do the math, let me do the math real quick for y'all. So 168 times. So they're going to pay us like $5 throughout the whole year in dividends, right? Market cap, this is basically what the company's worth, right? So if you look at the news, CNBC, a lot of times they talk about market cap. That's basically what the company's worth, how much money investors have put into this company. Over here, we have the 52-week high. This is the highest point that it's been within a year. 52-week low, this is the lowest point that it's been within the past year. So now when it comes to investing, I like to tell people about index funds. This is the easiest way to get into the market, and it lowers your risk, right? So instead of buying an individual stock, you buy into a group of stocks, right? So the way I like to think of an index fund is like when you go to a restaurant, they have a bunch of different appetizers. So each individual appetizer is an individual stock, right? So you go to a restaurant, they might have mozzarella sticks, they might have nachos, buffalo wings, right? Each one of those by itself is an individual stock, but they typically have like a sampler. And that sampler comes with a little bit of everything on one plate. That's basically what an index fund is, right? So you put your money into it and then they spread it out within those companies. And it lowers your risk because if one company goes out, they just replace it with another one and you don't get hit, you don't lose all your money, right? So the three common indexes that are most talked about, especially in the news, the number one is the S&P 500. This represents the 500 largest companies in the US. This is basically what a lot of 401ks and financial advisors typically compare the returns to. This is pretty much what everyone looks at. How's the market doing? They're referring to the S&P 500. So if you look at CNBC, a lot of times, oh, the S&P 500 was up this, it was down this. That's what they're referring to. Now the Dow Jones, pretty much mainly your technology companies, right? So you're going to want to think of Google, Microsoft, Apple. They're going to be all included in the NASDAQ 100. So now when it comes to, okay, what stocks do I invest in? I think you should look at where you're currently spending your money, right? Start there. Some of us are probably watching this call either on an iPhone, maybe an Android, on a PC or a laptop, right? We're already spending our money there. If you got an iPhone, invest in Apple, right? We're already giving them our money, right? So why not own the company? Because all their profits that they make is going to eventually come back to us, right? That's how I see it. Look at where you're currently spending your money. Some ETFs, again, how we mentioned, they lower your risk, right? They diversify your portfolio. You want to look at VOO, that's the Vanguard S&P 500. And then QQQ Invesco, this is the NASDAQ 100. So this one, again, it's going to have your tech companies. It's going to have like Amazon, Microsoft, Apple. You can invest in both of these. Now, when it comes to dividends, I like to invest in SPHD. This one, they pay me each month, right? Or you could just look into the Dividend Kings. So that's another way you can invest as far as looking at one company's. Another strategy that you can do is, pick a fund. So for example, like the S&P 500, this one, you could look it up on Google, see like S&P 500 top holdings, which is public information. Again, they have to disclose what they have in that fund. And then what you're going to want to do is look at the one or two companies that are in that fund and then just buy that one. And that lowers your risk. So now when it comes to buying, there's a method called dollar cost averaging. This is what I do. It makes it simpler, right? Instead of trying to get all fancy and do all these mathematical calculations on the best price, when to buy, should I buy it now? Should I buy it tomorrow? What should I do? Dollar cost averaging basically simplifies just buying the stock, right? You're going to buy it if it's up or it's down. So in this example, let's say you have 6,000 to invest. You can choose to invest it all at once, right? In one lump sum right here in this orange color. You just put all of it in one shot. Or you can invest that 6,000 throughout a certain period of time. So you might buy 100 shares here. The market moves down the road, you buy 77, a little bit later, the price drops. So you're able to pick up a couple more shares. And basically what that does is it allows you to have your average cost of that stock lower, right? So in this example here, those 600 shares, if you bought it all at once, they cost $10 each. Over here, right, doing the dollar cost averaging, you're able to get it at $8.85, right? So just by doing this method without trying to get all fancy, all the calculated mathematical metrics, just simply buying, you're going to have a lower cost. And this is going to help you in the long run as far as making money. Again, that capital appreciation. Another thing that I like to use is the Fear and Greed Index. So this is on CNBC.com. Just type in Fear and Greed Index. They provide this. I usually like to buy when the market's either at 50 or below, right? Because when it's at greed, that means everyone's probably getting into the market right now, right? Everyone's buying, so the prices are moving up. There's a quote by Warren Buffett, who is a famous investor, right? Probably like one of the gurus, one of the top investors of our time that people like to look to as far as guidance. He says, "Be fearful when others are greedy, and be greedy when others are fearful." Basically, when people are selling and they're panicking, like I mentioned earlier, that doesn't necessarily mean the business is going to go out of business, right? There's a lot more opportunities for you if you have the cash available to go and invest, right? There's a lot of opportunities in chaos. That's where you make the best investments. That's when you come up on sales and deals, right? So again, I use this as a gauge of when to buy. Typically, when it's at 50 or less, that's when I want to get into the market, start buying positions. Again, I typically buy in index funds, like VOO. That's one of my go-to ones. I typically just pour my money into there. Now, cryptocurrency, right? Let's do a quick overview basically on what it is. So it's a virtual currency that acts as money and as a form of payment outside of the control of any one person, group, or entity. Basically, what it does is it removes the need for a third party, which is basically the bank, right? So money is sent directly from a digital wallet from person A to person B, and it's instant, right? With the banks, we have to typically do a wire, or if we send it, let's say through Zelle, right? It takes a couple of days for the transaction to process and go through. With cryptocurrency, the transfer is instant. You don't have to wait, right? I could send money right now to anyone in the world and they'll get it in a split of a second, right? We don't have to wait. Now, these transfers are made through what is called the blockchain. The blockchain, think of it as like an Excel spreadsheet, right? It's an encrypted transaction ledger, which can't be changed. So once a transaction is inputted into the blockchain, you can't change it, and it's public information, right? So cryptocurrency is basically decentralized finance compared to like the banking industry right now. A lot of banks don't like cryptocurrency because it basically takes them out of the picture, right? When you go to a bank, a lot of times they have control of the funds, right? If the government says like, hey, we're going to put a hold on your account, they could do that. With cryptocurrency, you can't do that, right? You can't stop it. You can't block any transactions. It is what it is, right? Once you send it, that's it. Now, how these transactions are validated and encrypted is through what is called crypto mining, right? And people want to validate and make sure everything goes through successfully, because when it comes to mining, miners get a reward, right? So they get a piece of cryptocurrency. So let's say they're validating transactions for Bitcoin, they're going to get paid in Bitcoin. So for them, it benefits them to make sure everything's smooth, everything goes in. And it takes a lot of power, a lot of energy, right? Electricity in order to get that going. So it's very costly, but that's pretty much how it's validated and make sure everything's encrypted. Now, just to keep cryptocurrency simple, right? And I'll give you my personal perspective on it. There's so many coins out there. Instead of thinking which one's the next one to explode, right? What's the next crypto to pop? I think we should be looking at it at which one's going to change the world, right? Change the way we use money. So there's 3 cryptos that are highly used throughout the US. It's Bitcoin, Ethereum, and Tether. Bitcoin and Ethereum are pretty much the same thing. Tether is basically like a virtual US dollar, right? Now, when it comes to cryptos, there's a bunch of risk, right? Because it's a digital wallet, it can be hacked. There's been a lot of frauds and scams through ICOs. ICOs, it's like a IPO when it comes to stocks, right? This stands for initial coin offering. Another thing is that it's not as liquid. You can't convert it into cash as quickly as, stocks. You could buy it and sell it and then start using that cash. And it's a lot more volatile, meaning that the price of the stock is going to fluctuate a lot more, right? It's going to go up and down. When I first got started into crypto, I actually lost money. In 2017 is when I first heard about it, right? I put like 3,000 into Ethereum, And it went up. I thought, I was like, oh man, this is going up. It's going up, right? Everyone was getting into it, but and then that was the first time I experienced, how quickly it could drop, because it dropped all the way down my portfolio to like 1,000. So I lost like 2,000, right? But if I would have held right now, Bitcoin's up like 60,000, right? So when it comes to cryptos, it's more of a long term thing, right? And I would recommend just having money that you're okay with locking up for years down the road, right? And when it comes to all the coins, in my opinion, I think the best one and the only one that we should be investing in is Bitcoin, right? The reason why I say Bitcoin, that's the one it's been around for the longest. It has a good track record. It's been here since 2013, and in any other cryptocurrency, you recognize it as legal tender, right? It's only a matter of time till other countries start adopting that as well, right? And the difference between Bitcoin and the US dollar is that Bitcoin has a limited supply, right? With the US dollar, we could keep printing money, and that's why we have inflation. Is they print more money to stimulate the economy. Well, Bitcoin, you can't print more Bitcoins. Whatever's out in circulation, that is what it is. And that's another reason why the value and the cost of Bitcoin is going up, because of supply and demand, right? So as it gets adopted more and more people start jumping into it, that's when the value of Bitcoin is going to pop off a lot more, in my opinion. Bitcoin right now sits like at 60,000, right? Some people might be like, oh, we should get into crypto. We should buy Bitcoin right now. In my opinion, I would wait, just because since everyone's flocking into it, right? Everyone's putting money into it. It's going to have a pullback. There's going to be a point where, it's not in the news anymore, or it just dies down. And then that's going to cause the price of it to drop a bit. And then that's when you want to start buying into it a little bit more. Now, when it comes to buying cryptos, here are some crypto wallets that you want to look into. There's Kraken, Coinbase, Gemini, and Binance. The most popular one is Coinbase. I use Gemini and Coinbase, but again, I like Gemini because it's easy to use. I have it on my phone. I just buy it through there, and I just buy and hold. Like, I'm not looking to sell it. I'm not looking to do anything. Just simply hold it. Right now, I have about 3,000 invested in crypto. Again, majority of my investment, I put it into stocks. I think stocks is easier to comprehend, just because when you invest in a stock, like we mentioned, it's an actual company behind it, right? You're investing in an actual company, in an actual business. With cryptocurrency, it's a little bit harder, I feel, for people to kind of grasp it, because it's just like a digital coin, right? There's nothing tangible or anything that's directly behind it. All right. So now resources. I use Investopedia a lot. They have a lot of good information there. If you have anything you want to look up, terms, Investopedia is going to be your go-to. YouTube, I found a lot of information there. If you need any videos, breakdown on certain things, that's what I use. Google, another one. When it comes to stocks, I use this website called Seeking Alpha. Right there, they break down a lot of the company's financials, their dividends, their payout history. And then for myself, I go by Eddie the Hustler on all social media platforms. If you ever want to reach out to me, have any questions, I'm super active on Instagram. I'm constantly posting my results, showing what I'm buying, why I buy it, and always interacting with, my followers. So if you have any questions like, hey, have you heard about this stock? I'll be in there chopping it up with you. So those are, some resources that I have. And then again, I just wanted to keep this very simple. There's a lot more information, a lot more that we can deep dive. But again, my main goal is to have you, think, okay, why should I invest in stocks, and what are some investments I can make today, right? Again, going back to ETFs, these are the easiest way you can get into the market. VOO and QQQ are two of the biggest ones, and the ones that I like to recommend. SPHD is another one. So you can start investing into those today, start getting your feet wet, right? And again, lower your risk. So with that being said, I want to open up the floor. If anyone has any questions, anything that I wasn't clear about, feel free to ask away. I want to make sure I get you guys a solid foundation.
I do have a question. I appreciate this, Will, Eddie, bro. I appreciate
Yeah.
that information you shared something with me that I wasn't aware of. I think
Yeah.
it was a P and E ratio. I never
Mhm.
knew why the P and E ratio
Yeah.
was there. And now you just helped me understand that number as well. And you also showed me where to see how much the dividend yield will be paying out, because I never knew where to actually see, all right, what's the percentage that they're paying out on this particular dividend. I would just go
Yeah.
buy stocks based upon, hey, I knew they had dividend, so I would just go and buy them, but I never knew the percentage. But I
Yeah.
just learned it right there.
Okay. Yeah. Glad. Yeah. Again, the P ratio is the way this is kind of like a gauge again to see what the company's worth, right? So basically,
Yeah.
in order to, when you invest in, let's say Pepsi, you're basically paying $25 for $1 of earnings that that company makes, right? That's why
Mhm.
it's a gauge of how expensive the company is, right? The lower it
Yeah.
is, the typically the better. But you also want to look into its peers to see like, hey, is this company, kind of overpriced, or if it's like in line with all the other companies. But that's something that I use when looking at companies is a P ratio, right? And I
Yeah.
compare it to others just to see like, hey, am I paying too much for this? Should I wait for it to pull back a little bit? And then the dividend yield, uh, yeah, that was always going to be in a percentage. So
Yeah. Um, Let me ask you this question. Are
yeah,
you a fan of XRP? And if so, because I know there's people on here that want to ask that question. Um, and if so, where would they be able to purchase XRP, or is it available for purchase?
yeah, I personally don't own XRP, but with
Okay.
XRP, you should be able to purchase it through Binance or Kraken. So they should
Okay.
have it on their exchange. So if you want to buy XRP, you could go through there. Again, when it comes to crypto, I typically just have
The base.
Bitcoin. Yeah,
Yeah.
that
Yeah.
that that's my main one. Because again, when that's the big dog, and it has a long track record again since 2013. If we look at the returns, it's crazy. That's the one that
Yeah.
everyone talks about, and I think that's the one that has the most value as far as being adopted, within other countries' economy.
Yeah. Now for everybody that's on the call, I want to share with y'all a testimony. Which my sister was on this call, and my brother, I think my brother might be on here, but a testimony from my experience in trading stock options. Okay, that's something that Eddie didn't go over, but it's
Yeah,
another form of trading that's very lucrative, but it's also very risky. But once you understand trading stock options, you look at stock, you look at money completely different once you get into it. But in 2020, actually 2019, I was super heavy into trading stock options. As a matter of fact, I was so heavy into trading stock options is that I made so much money trading stock options that I was able to fly my entire family. Well, not the entire, but my daughter. I just had one daughter at the time. My mother-in-law, my girl, myself. We stayed in Hawaii for like a week and a half, and the entire week that we stayed there, for one, I paid for the flight with my City Advantage American Airlines business credit card, for one. And I actually use points. So that's why I tell y'all it's very important to get y'all credit straight. So I used points for the flight, but then I was able to pay with the money that I made from stock options for my resort for the week and a half. And we had a 2 bedroom, 2 bath condo, full kitchen, everything, patio, all of that stuff. But while I was there, I continued to trade options in the morning. So I would wake up, I think it was about 3 o'clock, Hawaii time and for 8:30 the United States time, Texas time, just so I can get up for opening bell and trade options so I can continuously make money. And I was getting paid out like every single minute, like every 15 minutes, I was in and out of the trade. You know, I was in and out, in and out. And it was really only one trade, and I was trading at the time. I want to say I was trading Tesla and Apple, and it was one other one, Advanced Micro something. It's AMD was their stock symbol. But I remember that very clear because I made about $18,000 on that trip. While I was there on that trip, I remember like, yo, Corey, look at this here. I just made 9 grand. She's like, what? So, oh, look at this here. I just made another 9 grand. Trading this one right here. And when I say I had a different vision when it came to stock options and stock. Like that's why I say it's so much easier to trade stock. And Eddie said that too. It's so much easier to trade stock because there's actual companies that's tied to them. So you can kind of do a lot of the business based upon how the company is growing or how the company is declining, right? And if you see a company on a decline, you can easily make money when a company is on a decline and even on the uprise too when it comes to stock options. And you're able to see the growth of the company versus Bitcoin. You don't actually see like the actual product, service, or people growing. You just see a number.
Yep.
You know what I'm saying? And you see the hype around a number. But with stock, you actually see, okay, Amazon, uh, they're either growing or declining. Google, they're either growing or declining. Ford, they're either growing or declining, and it's visible because you see it in their production and their services. So yeah, I think if you are interested in trying to put your money anywhere, it will be in stocks, you know, because you can actually see the products and services that's tied behind all of these companies as well too.
I had a quick question for you, Eddie.
Yeah.
Oh, sorry about that. Can you hear me?
Yeah, I can hear you.
Oh, perfect. So, when you were going over dollar cost averaging, I basically was trying to figure out. So, the way I used to do it, at least with crypto, was
Yeah.
I would have a set amount, let's say like $50 a week, and then I would just have it like auto draft for that particular coin, like an Ethereum or whatever, right? But do
Yeah.
you recommend that on stocks, like to dollar cost average, like manually, like yourself, or just do a set amount that you're comfortable with and just have it set it to where it just auto drafts so you don't have to worry about it? Like, what do you think is the better when it comes to stock?
Honestly, it just depends on what you're more comfortable with, right? So like I've had myself, I've done it where I just have kind of like what you're doing right now with crypto, right? I'll have $50 constantly going into SPHD, which is a dividend paying stock that pays me each month. I'll just have $50 going in there directly. Another one is like Pepsi. I like Pepsi, right? They own Frito-Lay, Hot Cheetos, like they're big in the snack business. So what I do is when I get extra income, right, or I make more money, I take that extra money and I just put it into that stock to increase my dividend payout. But both
Gotcha.
methods work. There's no right or wrong. It's just whatever you feel comfortable with, right? But it's better to dollar cost average rather than trying to time the market. Because the more time that you're in it, the better returns you're going to get over the long run.
Yeah, that's just what I did to build the habit, of every day, this month consistently doing it. And like you said, over time, you do get a better average price. So I just wondering what your thought was on that. Thanks.
Yeah, my pleasure. Appreciate the question.
All right, I have a question for stocks. I know
Yeah.
you mentioned some of the top like Pepsi and Tesla, but do you ever mess with penny stocks?
Penny stocks, I don't. I don't mess with any of the penny stocks. I usually, again, my investing strategy is pretty much for cash flow, right? I invest for cash flow. I want to have that passive income. I want to have money coming in each month. But yeah, I haven't played with any penny stocks.
Okay.
Oh, I forgot to say that when I was trading options, that's what helped me pay off my mom's house in September of 2020. Yeah, so I'm not saying that it was a six figure or multiple five figure, but it was a good amount of money that she owed left on it, and I was able to pull money from there and cut her a check to pay off her home. So it's a great investment, really great investment when you have the right information and the right people guiding you too.
Eddie, and one more question.
Yeah.
So I just recently started doing, like, I have the portfolio is pretty mixed with crypto and stocks.
Yeah.
However, I don't know too much about the stocks. I'm really just now getting into it.
Yeah.
But what do you think about the Cash App? They also have like a little platform there.
Cash App. I typically want to. I mean, it's okay. I've looked at it. But again, I prefer using um Robinhood if I'm going to use the app, or like M1 Finance or Webull, just because
Oh.
that's what they're known for, is to be a brokerage exchange, right? To give you access to buying stocks. I think with Cash App, it was mainly like a what is it, like a Venmo or Vimo at the beginning, right? And then they started expanding.
Yeah. Okay. Yeah,
Yeah.
because I've been like just kind of trading a little bit, doing
Yeah.
just starting, but it's definitely helped me like find what I'm really interested in.
Yeah.
And but all right, I appreciate that.
Yeah, anytime. Yeah, I mean, there's lots of ways to make money in the stock market. I just think find one method that you like and stick to it. And then once you feel like, okay, I think I got this, then start looking to add other tools into your toolbox, right? So like myself, I've been pretty much doing a long-term investing, right? I just been dollar cost averaging, buying until I got my portfolio up. Mainly my dividends, right? I'm working on growing that. Now I am getting into swing trading a little bit more, right? So getting more into technical analysis, looking at charts just to get another source of income. But just pick a strategy, find one that you like, and then just stick at it. Put the time in to get it down.
Bro, I definitely appreciate this information tonight. I know I'm not the only one that appreciate it. And then you probably just kind of, woke some people back up and got them like, you know what, let me go back over here and look at this here.
Yeah.
I'm gonna leave the floor for two more questions. And after that, we're gonna go ahead and end tonight's call. So we'll take two more questions towards Eddie or myself, and then we'll end the call. Again, man, listen, guys. I am trying. Now let me not say trying. Let me take that out of my vocabulary. I am going to build this Telegram or Discord, whichever route we end up sticking with, to 5,000 individuals by the end of the year. But the goal is to have the people that's here early already then got, a bunch of testimonies, a bunch of people who have 700 credit scores, a bunch of people who's invested into stock, crypto, whatever the case may be, a bunch of people who created a cash flow for themselves and for their children, a bunch of people who understand life insurance better, and everybody has life insurance Because if you guys do it early on, it'll make it so much easier for the people that's coming later. Because you set the example, not me. Y'all set the example, y'all set the stage to show that it can be done and it will be done. I'm not saying that I'm better than any guru that's out there or anybody that got like 50 million people in their chats and all of this here stuff. But I can say that I actually care. You know what I'm saying? And it's not a money grab thing to where we're trying to take anybody's money in here. Nobody's asking for no money to be, hey, send me this just to get in this group. It's not that. That's not what I'm on right now. What I'm on is I feel that we all have resources and tools and knowledge and wisdom that we can all share with one another. Eddie may have a missing piece to my puzzle. I may have a missing piece to his puzzle. But guess what? I'll know that by the information that he's sharing, and he'll know that by the information that I'm sharing. Just like what Steve may have a missing piece to your puzzle that you're trying to create right now. You may have been searching for marketing, or how can you get into marketing or digital marketing or affiliate marketing or Amazon or TikTok or Shopify. And that might be the missing puzzle right there. So I'm not saying that y'all have to be, you know, spend y'all time on this in this Telegram like it's social media, but spend your time in this bitch like it's social media because it's full of resources. It's not full of a timeline or thousand mile scroll of negative information, misguided information, or information that doesn't apply to you or your circumstances or your situation. That's not what this group has. This group has everything that you need. We're about to add the physical piece to it. We got Ace that's on here. Ace has been my trainer since 2018. He's one of the only trainers that I've ever had from 2018 all the way up until now. I hadn't flip-flop from different trainers and all this here. Ace has been my trainer, and I had a boxing trainer outside of Ace. Okay, so Ace, after the conversation that I had with Ace today, Ace and I have decided to have a fitness section for this group, meaning we're going to be meeting up and we're going to be working out together. You don't have to, but it's better than what you have going on right now. It's better than going to the gym because you got somebody to guide you, somebody that knows exactly what they're doing. Just like my brother just got on here and said, you know, I don't know much about stocks. I've been learning. Eddie could have been a missing piece to his puzzle. Eddie probably shared some information that he had no idea on. But the simple fact is that it came from somebody that was already within our circle. Y'all don't have to go and search. Like, you don't have to search Instagram no more to figure out if you're gonna get into real estate developing. I got somebody within the group that's a multimillionaire that reached out to say, listen, bro, I want to save your group 2 years of headache and show them the shortcut and the right way to get into developing properties. And he's building multi-million-dollar townhomes here in the heart of Houston, like in the heart of Houston, in the part of Houston where you'd be like, man, them little bitty houses selling for 500,000, or this lot selling for 500,000. He's building 3 and 4 and 5 and 6 townhomes on one lot and making millions of dollars. And he's wanting to share his information, his knowledge. That's what this is about. So I thank you, Eddie, from the bottom of my heart, brother, for doing this for them. For them. I'm not even gonna say for me, for them, because I want them to have the right information. I don't want anybody within my circle to be misguided or misled with the wrong information or be misled with the glitz and glamour, because I've been misled like that before. And it doesn't feel good when the person with the flashiest shit on social media, you go to do business with them and they do the worst fucking business ever. They dog you out. And you went there because they were so flashy. It looked good. They looked great. They was at all of the clubs showing that they pop bottles with their signs. Like, that's not what we own on this here, bro. Like, we own some real business shit. We got some real genuine people that's sharing some real information. Not no BS fluff. Not no BS fluff. We not doing that. We not doing that whatsoever. We're gonna show you where we got the information from, how you can get the information, how you can apply this information to you. And the only thing that is left to do is for you to go and apply the information. Eddie just gave us great tools just to get started. He didn't say, listen, this is how you're gonna make $50 million with stock options or with stocks or cryptos tomorrow, or hey, if you want to make an extra $1,000 every single day. He didn't say none of that shit. He kept it simple. He kept it very simple. And like, yo, you want to get in? Here's what you do. Here's some great sites. It's up to you to take what you saw on here, research it some more, and see how you can apply that information and research to your life to move the needle, if that makes sense. So without further ado, man, I appreciate you, Eddie, bro. Again, this is not the only call that he's gonna do, guys. It's not the only call that Devin's gonna do. It's not the only call that Steve is gonna do. It's not. As we get better and as we become the individuals we're set out to be, these calls are gonna get better. The information is gonna get better. The know-how is gonna get better. The people that's coming on here is going to get better and greater. I promise you that. That's how determined I am to make sure that the people that I communicate with on a daily or within the last few years or consistently, or you've impacted my life in some kind of way, I'm going to make sure y'all got the right information. Just chill. Hey, whatever you're looking for is going to be in that group. I even have somebody that can teach y'all how to buy cars properly, the right way. Not just me, even though I know how to, but teach you how to buy cars and skip the BS when you go to the dealerships. So again, man, I appreciate you, Eddie. I appreciate everybody who jumped on tonight. If y'all don't have any more questions for myself or Eddie, man, I appreciate y'all, man. Y'all have a blessed and beautiful night. God bless y'all. Oh, and also, y'all saw how my daughter went to sleep and my aunt, well, she had to go put on her clothes and then went to sleep. But y'all saw how I allowed my negative circumstance, her, not to distract me from y'all. So again, man, I appreciate everybody, and I see y'all on the other side, man.
Appreciate it, Eddie. Thanks, Will.
All right,
appreciate
later,
it.
guys.
I think y'all have a good one.